back. The Ford Motor Company just reporting second quarter earnings. The auto giant beating expectations for both revenue and earnings per share in the second quarter. Earnings coming in at 56 cents a share. Revenue at $39.9 billion. The stock right now is fractionally lower this morning. Take a look, down 2/3%. Joining us right now in a First on Fox Business interview from Ford headquarters in Dearborn, Michigan is Chief Financial Officer of Ford Motor, Bob Shanks. Bob, it's good to see you. Thanks so much for joining us.
It's a pleasure to be with you. Thank you.
Characterize the quarter for us, Bob. What were the highlights?
Well, as you mentioned, we grew the company. We had a solid profit. We had a solid margin. We generated positive cash flow. The balance sheet remains very strong. And as you mentioned, because of some great tax planning by our team, we also delivered an improvement in terms of net and also our adjusted EPS. Yeah,
you were also able to raise full-year guidance. We want to get more on that from you, given the fact that really it's been a tough year for the industry. I mean, just a year ago we were talking about things slowing down in terms of the auto market. What is causing you to raise full-year earnings guidance? Do you see a change second half of the year?
Well, we don't really see a change much in terms of the external environment, nor in terms of our overall profitability. It's about the same. But due to some great tax planning by our team in anticipation of the potential for corporate tax reform later, we've been able to identify in the quarter, and we expect more in the balance of the year in terms of some tax credits that we're going to be able to bring onto the balance sheet.
So you are expecting then tax reform out of Washington to impact the entire industry?
We're very hopeful there's going to be tax reform. We're certainly very supportive of that, and in anticipation of that, we're taking these actions this year.
So auto sales in the U.S. were down 2% for the first 6 months of the year, 3% just last month. What's behind the auto sales numbers? What can you tell us in terms of consumers and what they're doing?
Well, the consumers remain very healthy. Actually, most of that decline is on the fleet side. I think retail is only down about 1% or so. Most of that through the first half of the year has been on fleet. A lot of that has been rental, but not just rental. As we look ahead for the balance of the year, we think in the second half that it's going to be about the same story. We're going to see a very slight decline on retail and somewhat more in terms of fleet.
What can you tell us in terms of the strategy at Ford right now? We've spoken with Mark Fields in the past about his intended increase in investment in technology and what Ford is doing in terms of autonomous cars. Has the strategy changed with the new management team in place?
Well, what we're doing right now, Jim Hackett calls it unpacking the strategy. So we're actually I think we're actually very much in the middle of a 100-day reassessment of the business that we're all going through. And that includes looking at the various elements of our strategy, the decisions we make around that, and also near-term performance. I have to say a lot of action, a lot of work underway, and we'll be coming back later this year to tell you what the takeaways are from that work.
So would that mean less of a focus on the technology and the autonomous market? I mean, when you look longer term, self-driving cars, you've got Tesla CEO Elon Musk recently predicting that almost all cars produced will be autonomous in 10 years. Obviously, no surprise he's bullish on that. But regardless, what are you doing at Ford, and do you disagree with that notion?
Well, we certainly are continuing to invest on the trajectory that we were on in terms of autonomous vehicles as well as electrification and digital services as well. So I think it's more around us unpacking all of that and making sure that we're happy with the decisions that we've made so far, what's ahead of us, where we're going to invest, where we're not going to invest. But in terms of generally, are we going to be focusing on those areas? Absolutely, and we're continuing to make progress in all of them.
All right, we will leave it there. Bob, good to have you on the program. Thanks so much.
Thank you very much.
Bob Shanks joining us there.